Hello and welcome to this presentation from the Practice Protection Committee. I'm Pat Bailey, Medical Director for Advocacy in the DC office. Today we're going to be learning about lessons learned about insurance. In these pandemic times, we've had significant changes to our lives and we can suddenly find ourselves in situations that we were not prepared for. And I'm pleased to welcome today, again, Dr. Mark Aeder, who is going to speak to us about what we need to know as surgeons to be prepared for inevitabilities and what insurance coverages we should purchase. Mark, thanks again for being with us.
Well, thanks, Pat. And when I put this together, I was really answering some of the questions that I've been getting over the past few months, actually almost the last year now. And they were pretty concerned, but I think they're applicable across the board. So I'm going to start off with a couple of scenarios here. You're in training right now. You're a fellow, or you're just getting out. You have $200,000 to $300,000 in outstanding student loan debt, and you're living on $4,000 a month of expenses. And you may have a spouse, you may have a significant other, you may or may not have children or parents relying on your income. And you have a term life insurance policy of $100,000, and you have a pre-tax hospital disability policy of $1,500 a month. And I want you to think about that and think how those numbers fit, because we can take a look. You're in practice. You're earning a pretty good salary, $350,000 a year. Your retirement savings are about $600,000. You're saving $3,000 a month. You're doing pretty well there. You have a mortgage and 2 cars, and that's costing you about $50,000 a year. You have living expenses. You may have care or school tuition for your children. Hopefully your loans have been mostly paid off by now, but your expenses are about $8,000 to $12,000 a month. You have an employment opportunity with your hospital. And the hospital gives you term life insurance at 2 times your annual salary, which is $700,000. And the hospital also gives you a hospital-sponsored disability pre-tax policy that'll give you $2,000 a month. And again, I want you to be really aware of the mismatch of what you get and what you're going to need. So life insurance, what is it? It really provides a financial payment for outstanding obligations, basically for your dependents. And it takes on different roles depending upon where you are in your career. So early on in your career, you really want to repay your supporters. You want to cover your debts, your loans, everything. By midlife, if something should happen, it protects your family and others so that they don't have a major disruption in their lifestyle and comfort. And then later on, there may be a role that, again, this is part of your financial planning to protect your estate and future generations. The key about life insurance is once you get a life insurance policy and you hold it, no matter what happens, no matter what you're diagnosed with down the line, it remains in force despite those changes in your health. How much? What I would say is that you really should have about 10 times your annual after-tax income and coverage. So for that doc who has $350,000 a year in income, their after taxes probably are someplace around 250, 225, 250. Probably should have $2 to $2.5 million in life insurance, at least through the early and midlife. And of course, this is going to be modifiable depending upon your dependents, your finances, and how much you really need as you get older. When you get a life insurance policy, really take a look at the options and exclusions. They're not all the same. Now, let's go back to that employer supplied one. They can give you 2 times, they can give you 3 times. You can buy up, but be aware of your carrying cost of keeping that insurance, especially if you change employers and you develop a new medical issue in the interim. You may come off that employer's group plan and may have to try to sustain your policy individually which can be fairly expensive. I would say you really need to look into owning your own plan that you can carry for your life. You can supplement it, you can increase as long as you're in good health. You have to pass a physical for these large amounts. But again, once insured, you're always insured. You can do any one of a number of things. And again, this is something for you to work out with your financial planner and your counselors. You can have a fixed payment with cash reserves that build up. And the good thing about it is that these funds that build up and accrue may be able to be a source of income later on. And if you're ever involved in a legal action, they're actually protected, just like your retirement accounts in many states. Uh, Basic one, term insurance, and you can get a good term insurance policy, especially when you're young. The thing about term insurance is that it's going to increase. The premiums will increase as you get older. So just kind of keep that in mind. But if you're going to buy term insurance, consider buying it through a large group. I can tell you when I started out, my term insurance was with the American College of Surgeons, and they had a great plan, and it covered me through much of my early years. The other thing about your life insurance is to keep the beneficiaries, both primary and secondary, the contingent beneficiaries, up to date. We go through life changes, and you want to make sure that somebody who is listed on your life insurance policy as a beneficiary that no longer belongs there needs to be removed. So really keep that in mind as well. The second thing we talked about was disability insurance. And this is the most important product you're going to have to protect your family. And as this whole pandemic rolled out, we not only saw people just with just with unbelievably mortal consequences from this, but we saw very disabling injuries. Anything from fatigue to just not being able to get things going, and that was irrespective of age. And for us as surgeons, we really rely on a lot of our skills. Everything has to work perfectly. Now, baseline throughout your career, you have almost a 50% chance at some time of having a disability lasting 6 months or longer. And over 90% of these are due to a medical condition. And as I said, we really need fine technical skills, we need cognitive skills, and we really need stamina to keep going. And a lot of those things can be challenged, especially with infectious diseases. Now, when you get your disability insurance policy, like your life insurance policy, once you're covered, you're going to be always covered. And you're going to maintain that coverage all the way through your policy term. Now, some of these disability policies expire at a certain age and may expire at age 65, 66, or something. Some of them are even more long lasting. But remember that if you're disabled and cannot work as a surgeon or maintain your present income, you're going to be more of a financial burden to your family than really if you've died. I mean, it's sad to say, but we really should have this safety net. Your employer really provides a basic policy. It's going to cover you. You have a short-term policy. I think everybody gets 90 to 120 days. That's generally the waiting period for a long-term disability policy. They generally give you $1,000 to $2,000 a month, depending upon your employer, for long-term disability. Remember, this is taxable, what they give you right out. They allow you to voluntarily buy up coverage with after-tax dollars. But so just kind of keep that in mind. And it's generally an income replacement policy. It's not an own specialty policy. So if you move from an active surgical role and you no longer can perform your surgery into an administrative role, then what you're looking at is not being covered for your loss of income as a surgeon, but the difference and a percentage of that difference in what the two salaries are. You may have limitations for the term of coverage, as we've discussed, and it may or may not be portable if you ever leave your employer, if you're working for a system, and if so, at what cost, and depending upon what your underlying conditions are. You really need to have your own coverage, especially through your operative career. You have to own your own policy. Keep it with you. It will not be canceled. You travel with it from employer to employer. Purchase it with a reputable carrier. And you may want to consider an independent agent at this point that deals with a number of different disability insurance companies. And you want a company that's going to be around. You want to be able to update it as your income changes. You want to be able to add and modify it. You want to make sure that it's specialty specific for your own occupation. If you do microsurgery, then it should be specialty specific for your microsurgery. It's not for doing physical examinations. I always recommend a cost of living adjustment rider. Just because the cost of living is going to go up year to year, and your disability payments, if you ever need them, should go up accordingly. Always compare the terms and conditions, and that's where that independent agent comes in very handy. Important, pay for it with after-tax dollars. It may be expensive. It's nice to write off as a business expense, but if you pay for it this way and you ever have to use it, your proceeds that you're going to get out of this policy are not going to be taxable. And that is huge. You can keep that employer policy if you want. You can supplement it. You can buy up on it. You can use that policy to supplement the policy that you own. So there's no harm in having two policies, one with your employer that they give you and allow you the opportunity to buy up, but the one you own. What you want to be careful about is that you can't go buying up multiple insurance policies, because then you may run into some difficulties with that. So my final thoughts on insurance, really, as I kind of reflected on it over the past year, you've got to cover yourself against the risk of death or disability, and disability is a real nightmare. It's a nightmare scenario for many of us. You always need to assess, your income, just like those scenarios in the beginning, and how you can protect your assets from any sort of liabilities. You got to be able to cover them. You have to be able to protect those who you love. You have to have other coverages. I mean, we always carry other coverages and other protections, such as, umbrella insurance for personal liability and things like that. But the basics are life and disability. Those are the two you really should have straight out. So Pat, those were my thoughts. When people ask me about insurance, and I try to go through it, those are the main items that come to mind.
So Mark, you really well emphasized the importance of having about 10 times of your post-tax income per year as a life insurance policy. And is there any other major takeaway item with regards to life insurance that you would like to emphasize?
I think that you keep it current. You buy what you need in order to be able to protect those who rely on you. You have to keep your beneficiaries up to date for the life insurance. And just beware of the costs. I mean, you want it with a company that's going to be around. Should you ever have to make, or somebody should ever have to make a claim on your behalf. So.
And with regards to the disability insurance, you made the important point that it should be, I believe that it should be as income replacement as opposed to necessarily preferred for specialty specific. Drill down a little bit on that for me, and also drill down on whether or not you think it's better or inconsequential, whether or not you've got your disability policy from multiple places.
Okay, so income replacement is not what we're looking for. We're looking for what we trained for, what we spent our lives on. This should, as the policies can be written, is that it should be specialty specific. It's what you do. If you're a vascular surgeon, if you're a neurosurgeon, no matter what your field is, it's a specialty that you spent your whole life dedicated towards. And if you cannot perform that, then that's the income you're losing. If it's income replacement, then what it's going to do is subtract from the benefit whatever income you're earning from the outside, which may or may not be something that you really enjoy doing or anything like that. So you have to really try to make this specialty specific. And the second part of your question was, Pat?
Is there any preference or benefit that you see getting your disability insurance from multiple sources as opposed to just trying to gather it from one primary source?
So I think when you try to take a look at that, if you're going to buy this on your own, it's certainly not inexpensive. It's going to be something that you have to make the premiums on, and if that in of itself, certainly is important. If the insurance companies find out that you're overinsured, you don't want that to ever be something that causes you concern. I think if you have your own policy that will give you, it will cover you for whatever it is, a maximum of $15,000 or $18,000 or $20,000 a month, or whatever you buy or whatever they allow you to buy based on your baseline income, and you have a supplement through your employer of a fairly minimal amount, I think that would be more than appropriate. And remember, if you paid for it with after-tax dollars, you're not paying taxes on it. So if you're receiving a $200,000 a year on a disability policy with after-tax dollars as the payment on the premium, there's no insurance due on that. So you can go ahead and do that calculation in terms of your baseline salary.
Well, Mark, thank you very much. This has, again, been very helpful, your wealth of information for us. And we urge our fellows to take heed, especially in these days where there's so much uncertainty. And we wish you good day, and we urge you to join us again when we provide another video from the Practice Protection Committee.